Hello everybody and welcome to today's ITO Index Webcast, which will present a review and analysis of ITO contract activity in Q3 2015, as well as the outlook for the rest of 2015. Today's webcast will be presented by Dominique Raviart, NelsonHall's Director of ITO Research, and will be about 40 minutes in duration. This will be followed by a brief Q&A session at the end, and you can enter questions at any time through the presentation using the Q&A panel on your screen. As you can see, we've moved to a new platform for our webcasts as we seek to optimize our customer experience, and we'd be very happy to have feedback on today's event from you. If you do intend to tweet about the webcast, please use the hashtag ITOIndex. And so without further ado, I'll hand over to Dominique for the main presentation and join you at the end for the Q&A. Over to you, Dominique.
Thank you, Paul, and welcome everyone to this ITO Index call, Q3 2015. As you know, we've been holding this call for about now 7 years with quarterly calls, so this is the 24th time we're having this call, so we think we've got quite a bit of experience in this kind of discussion. Before we go on with the main presentation, I'd like to remind you about a few things about this ITO Index call. We think we're quite unique with this call because we provide both an IT outsourcing contract view of the market as well as spending view of the market. And we think the two views, the outsourcing contract view being long-term and the spending view being short-term, provide a unique view about what's going on in the IT service industry, IT service spending, and around its sub-components, professional services, i.e. consulting and system integration, and IT outsourcing. So without further ado, as Paul would say, I'm going through the first slide, which is really about a very quick overview of NelsonHall and more. And I'm not going to sort of read all the bullet points, but what I'd like to reiterate again and again and again is I think we've got two main differentiators. The first one is we service both clients and users and the vendors, and that in itself is a differentiator to our competition. And a second main differentiator really is the fact that we provide very granular, very detailed research and assessment of service offerings. And this is clearly a different positioning than some of our competitors that are more on the sort of high-level views on pieces of food for the next 5 years or so. So we've got a different position, and that's what I like to highlight. I probably need to still comment on the forward and reiterate again and again what we mean by IT services, because once again, if you come from the Indian industry or the telecom industry, we'll all use different words for different meanings or the same words for different meanings. So again, IT services in our side include professional services, so the short-term contracts, mostly build services. And IT outsourcing is really the multi-year contracts, mostly to provide run services. We do not cover in full detail hardware maintenance for the fact that it's mostly what we call a product attached service. So ITO, the run service, ITO has a very standard definition in our view, and that's what we're using. So it includes the multi-tower deals, our core full outsourcing, or multi-scope outsourcing, so a bundle of application, network, and infrastructure management. ITO also includes standalone infrastructure management, and as I mentioned, it includes as well network outsourcing, and standalone application management, or application outsourcing for the most part. So we'll be looking, as I mentioned, on both spending views and spending growth and booking views. And as I said, the bookings provide the long-term view, the view on the next 12 to 18 months in terms of how that's going to impact spending. And our analysis based on the revenues of main vendors provides us for the short-term analysis of what's going to happen. So we think we've got two complementary views on the market, and that has proven to be very useful. Something we're all aware of, but I need to reiterate again, bookings are for existing scope contracts, so renewals or change of vendors, as well as for the new scope contracts, so the expansions, extensions, and the new contracts. So again, an increase in booking does not necessarily mean there's an increase in spending, as always. Finally, all the numbers we've provided here are NelsonHall estimates, and that's an important one. I'm going to move to the quick agenda. The agenda should be very familiar to you. We'll move into the bookings view up to Q3 2015. Again, this is a long-term view of the market. This is all fresh data up to end of September. We'll move on to the spending view then up to Q2, because again, our spending view is based on cleaning and analyzing data provided by the vendors in terms of revenues. So we do spend quite a bit of time in cleaning the data so we can use them and sort of compute the spending view. And as you know, we're now entering the Q3 results and revenues announcement. So we're up to date up to Q2 for the most part. We'll look into the vendor performance quickly. Again, we get these requests all the time, so we're back with this section. And then we spend quite a bit of time actually on the outlook for 2015, but more importantly for 2016. We've tried to provide more meat or more slides about what we see are going to be the impact of cloud, Indian offshoring and infrastructure management, digital transformation in professional services, and finish with the outlook, the forecast, so to speak. So without further ado, now let's move on to the first part, which is the booking view. And I'd like to start this section really by a quick reminder, because it's always useful, especially for those of you that have not attended this call before. In 2014, that's calendar, ITO bookings were flat to $32 billion. And that was in spite of a surge in bookings in Q4 2014. So flat bookings in 2014. Those bookings were at a historically low level. And it's fair to say that since 2013, so about 10 years ago, bookings have halved. So we've got a market that has changed, that's probably going through saturation, with the nature of outsourcing changing as well towards smaller contracts and more relationships and contracts. Now, also there's a little bit of, there's certainly the impact of Indian offshoring, but also the impact of cloud computing. We'll come back on this. What's also interesting to say about this is the pattern itself have changed very dramatically. Back in 2003 or in 2009 and 10, these are the red columns on your slide. We suddenly had, with the economic downturns of those years, we suddenly had a surge in bookings. So it's very visible in 2009, 2010, when bookings were up to $52 billion in 2010, and that was also the case in 2003. So economic recession, big surge in ITO bookings. In 2003, these were new scope contracts, new contracts. 2009, 2010, renewal mostly, recompetes. And it's fair to say we also had a significant recession in 2012, 2013, but that didn't impact the renewal market or didn't lead to a surge in bookings. So the market has changed, and we've moved to a different kind of award mechanism, I should say. Now, a quick look into what happened in the first half of 2015. Here's a slide. In H1 2015, the worldwide ITO bookings were down 20%, and that 20% meant there were $3.5 billion in TCV missing. So compare H1 2015 to H1 2014, the difference year on year between those two periods was $3.5 billion. And we finished the last call saying, well, $3.5 billion is significant. But when you're talking about $32 billion in TCV for the full year, that's only 10%. So there's that could change very well. That could pick up very well in H2. So we finished the last call for last semester for H1 2015 saying, yes, there's a trend downwards, but you never know. We may well pick up in H2. Now we've got more information on Q3, and in Q3. Bookings were down 30% to $5.9 billion. So down 30% after a decline of 60% in Q2 and an increase of 50% in Q1. So there were two large deals awarded, one of which was a mega deal, both of them awarded by the UK Ministry of Defense for a combined $2.3 billion to consortium led by HP and Fujitsu. the number of large deals, I should say large deals rather than mega deals, was so deals in the $100 million to $999 million was 1,000. So it will come back on that one, but it was sort of a mediocre number. And for the period Q1 to Q3, we're still down 30%. So we probably now when you can securely say that 2015 is going to be another bad year in terms of ITO bookings. Again, we'll comment further on that later on. It's fair to say also because I know I'm going to get a question that IBM announced on October 1st a mega deal in Norway with Every. And as our methodology is to go from period to period, so we did not include this $1 billion mega deal in our Q3 numbers. Even if we had done that, even if we had included that every mega deal in our numbers, that wouldn't have changed very much our analysis at all, to be honest. Okay, so a bit, now Q1 to Q3, bad start of the year. It's not a start of the year, it's a bad trend, I should say. In the second KPI we look at systematically is the level or the percentage of new scope contracts. Now, you can see on the right side, the level of or percentage of new scope contracts was only 14% in Q3 2015. That's the right side of the chart, the right column. Sorry, it should have been in a bigger size. Apologies for this. Bottom line, a very low percentage in Q3. For this kind of deal, we need, however, to look at the Q1 to Q3 period, and we're back to 40%. And that's what the blue lines with an arrow show. That's the level for the period. So Q1 to Q3 2015, as I said, we are 40% of TCV was new scope. That's perfectly in line what we saw in 2014 for the full year, 40%. And 2013 and 2012 was respectively 35 and 30%. So in spite of the declining TCV, we saw a bit of an increase in the level of new scope contracts. Now, a different way of looking at this really is to look at the TCV itself. Let's wait until here it is. Okay, here's the slide. So in blue, the new scope contracts, the value, not in percentage, now in US dollar, and in red, the existing contracts. So, we see clearly that although the percentage of new scope contracts has been increasing, 2015 versus 2012, it's clearly declining. So we've got a new scope contract market that is declining as much as the renewal, and the renewal, of course, is in TCV is declining faster than the new scope. So again, it's a different way of looking at this KPI, but we are the market that is slowing down still. Looking at the different geographies, and let's start by the most important one in terms of TCV or in terms of trends and early adoption patterns, that's North America. ITO bookings in Q3 were down very significantly, sharply by 60%. Over the Q1 to Q2 period, that's minus 30%, so minus 60 in Q3. If you look up at the top chart, down 20% in Q2 and plus 20% in Q1. This kind of quarterly variation is expected, but bottom line is bookings are down 30% for year to date. The level of new scope contracts with TCV over $100 million was very low at 5%. That's the bottom chart, so very little new scope activity in Q5. Again, we will refer to Q1 to Q3 2015, and then we are 36% of new scope contracts. That's in line with what we've seen in 2014. Again, this type of lumpiness, differences between quarters to quarter, that's typical of the IT outsourcing industry. So nothing to worry about, and the level of new scope contracts is okay. Moving to Europe. Bookings in Q3 2015 were up Again, same type of lumpiness from quarter to quarter. And we've got so plus 60% in Q3, minus 80% in Q2, plus 60% in Q1. A lot of quarterly variations. Of course, in Q3, we had those two large MOD in the UK deals that made the difference, but they were there. And the second KPI is that's the bottom chart in the right column, a big 20% in bold, large font size, 20% of contracts in Q3 were new scope contracts. That's a bit at the low end of the range that we've seen in Europe. So let's look into the trend in Q1 to Q3, and that's 45% new scope contracts. So, and that's similar to 2014 full year. So again, sort of Europe being reverse of the US, of North America, sorry, in terms of TCV decline or increase or trend, but fairly stable in terms of new scope compared to North America. Now, I quite like this chart this table, but because it's a breakdown of IT outsourcing bookings or TCV by vertical, and we certainly, for whatever reason, we've seen that government, manufacturing, and financial services represent 70 to 75% of all bookings, and that has remained true whatever across the years. And that's interesting because this is, stable. The mix between manufacturing, financial services, and government changes, but combined, that still represents 70 to 75%. And that's across geographies. So you would think, when moving from the two main IT outsourcing countries that are US and UK, you move into continental Europe, you'll find different sector splits, and you would think you would get different vertical splits. And that hasn't happened. Financial services, government, and manufacturing still remain very prone to award IT outsourcing contracts. Now, I've been asked the question quite a number of times. If I were to look into spending, those three sectors, those three verticals do not represent 75% of all spending. Far below that, probably more around 50% or so. So what we've got here, we've got three verticals very prone to IT outsource, and so to contract IT services in large multi-year IT outsourcing contracts as opposed to professional services and shorter contracts. Anyway, in Q1 to Q3 2015, as I said, that was still true. Those three sectors accounted for 75% of all bookings. Government was up to 42%. Manufacturing, on the other side of the story, was extremely low, to 10%. And financial services was pretty much at the usual level of 24% or so. Nothing to report in the other sector. Transportation is a bit up those days thanks to two main deals. Healthcare, telecom, and media. Healthcare is right where it should be. Energy and utility is a bit down. Telecom, media is really down, and utility is a bit up. But nothing remarkable at this stage. So here's another KPI which is interesting. I find it's the number of deals we're reporting, and it's sort of the two lines. The blue line actually shows the number of mega deals, so deals over $1 billion and more, and the red line is the number of mid-sized deals. So the large is between $100 million and 999, so 100 to 999. And the blue line, that varies quite a bit from 0 to 5 max over the past 4 years. And in Q3 we were at 1. We had 1, so nothing to worry about. In terms of mid-sized deals, we were at the lower range at the lower limit of the range. So we had a little bit more than a dozen mid-sized deals across the world. That's a bit down. So in Q3, we had a conjunction as well of a somewhat lesser number of deals awarded than usual. And that probably explains also a bit why TCV and the bookings in Q3 were down significantly, for the end and for Q1 to Q3. So now we've looked into the the long-term view, the 12 to 18, 24 months type of view of the market. And as always, I can finish this section by saying it's not looking great. It's not favorable. We're still in an environment where the number of deals is declining in TCV. The number of new scope contracts is increasing steadily a little bit in terms of percentage, but it's declining in terms of value. We've got a market that is in decline mode clearly. Now let's look into the other view, which is really the short-term view, and see how that market is actually doing in terms of spending. And again, this is based on spending quite a bit of time cleaning the data provided by the vendors for the IT services revenues. So let's wait. Yeah, wonderful. So IT services spending in Q2 2015 was up 3%. So it was a bit higher than we expected. So 3% was a bit of a surprise. And as we expected more to be that into the 2% type of zone. Nevertheless, we think it's a quarterly variation, not meaningful in any sense. I like the chart because it really also see that something has changed in the IT service industry, and that on the left side you've got clearly the sign of the H2 2008 and 2009 subprime crisis and worldwide recession, and clearly it showed in the IT services spending. So in Q3 2009, spending in IT services was down by 4%. Now we've probably had a milder but still a true recession or slowdown in the economy in 2012-2013. We see that clearly that slowdown impacting IT services spending, but then we're back to some level of better economic conditions, at least in mature economies. The big surprise is Japan having resumed in the IT services spending. US is strong, UK is very strong, Germany is strong, Netherlands is back to growth. So we've got Sweden is strong as well. So we've got all the major large economies as far as our IT services spending is concerned, and it's not showing in the numbers. So something is happening, and we want to deepen this and go to the next section, which is a comparison between spending on IT outsourcing, which is in blue, and the spending on professional services, which is in red. And as you know, professional services is cyclical, and that shows very clearly in the chart here. 2009 crisis, professional services went down very significantly. Recession or mild, very, very flattish type of growth in the 2012-2013, up to 2014, I should say. It's not showing the professional service number. It should have, but it did not show. So we had a mild economic recession or very slowing down economy that didn't show in numbers, and the improvement in the market conditions, in the economic condition, has not shown either in the professional services. So something is going on. Something has changed the patterns in the professional services industry, and certainly clients are not as increasing as fast their spending on professional services this time. As far as IT outsourcing is concerned, it has behaved as more as we expected. It's been in a low minus single digit, negative single digit in the past few quarters, actually for the past 2 to 3 years. That's sort of expected. There's a lot of going on, with namely Indian offshoring and to a lesser degree cloud computing, mostly its public cloud impact. We've mentioned several times here on this call that we think the IT outsourcing industry now is a flat growth industry with a minus 2 to 3% decline in total during the worst year, and plus 1 plus 2 max in the best years. So we think it's a flat industry. The big surprise really comes from professional services. So let's deepen a bit of analysis and see what's going on. And this chart, when it appears, shows a reflection of IT services between two geographies, North America, commercial only, and Europe. So we've excluded the federal sector in North America, largely because it's got its own dynamics, and we're comparing them to Europe. And Europe, the impact of the UK government is much less. It's by far different from what's going on in the US federal. So taking those two views, we've got Europe in red, we've got North America commercial in blue, and we've got the two trends, the two curves behaving similarly up to end of 2012 and then 2013. Big acceleration in North America commercial sector, and Europe enjoying mild growth or mild decline. So we think looking forward, the future of North America is going to be in a high single digit or mid or around 5%. The 10% achieved this quarter are probably bump. They're not. We think they're anecdotal. They're too high. They should be more into 5 to 6%, which is solid enough anyway. And we think Europe is going to continue with sort of a flattish to negative growth for the quarters to come. And again, we think this is largely because Europe has not completed this transition to Indian prices as yet. So we think clearly the Indian prices and the impact it's having on the prices of the offshore vendors is going to decrease spending in IT services in Europe. And from a client perspective, this is wonderful news. When will Europe finish transition to Indian offshore prices? It's probably fair to say that's going to require another 5 years, at least, I would think. Let's have a very quick discussion on the vendor performance, and that's in Q2. Again, we had a request for showing this slide several times, so it's back there. It's back in our slide deck, and that shows the performance at constant currency, constant perimeter of the large vendors. So moving from TCS to CSC, and on the right side, you've got the second column to the right, you've got constant currency, constant perimeter Q2 2015 performance. TCS and HCL are above 15% in growth. Cognizant is probably at this level as well, but its performance is blurred by the fact that exchange rates and also its TriZetto acquisition, and Cognizant is not as transparent in terms of organic growth as the others. We've got Infosys, which is back to double-digit growth, 11%, which shows an acceleration in improvement in growth. We've got Wipro stable at 8%, so Infosys and Wipro slowly, gradually catching up with HCL and TCS. Still very high level of growth still if you compare it to the onshore vendors. And now you've got Accenture having now completely transitioned to an Indian model in terms at least of revenue growth. In Accenture, by our estimates of constant currency, constant perimeter growth of 9% in the past 2 quarters. So very solid, and probably in line, Accenture matches Infosys and Wipro, with the exception that with the fact that Accenture now is a $31 billion company, which is very significant. Now looking at the vendors that have an onshore background, so Fujitsu for its services units, Capgemini, Atos, IBM Global Services, GI, and T-Systems. Bit of a mixed bag with Fujitsu growing nicely thanks to the unexpected rebound in Japan for the past 2 to 3 quarters. I wasn't personally expecting such rebound in Japan spending, so good news, and you were seeing that happening as well with entity data. Capgemini is probably the for all those vendors listed here, is probably the one vendor that has gone the furthest in terms of transitioning to the Indian model and showing the number +1%. There's a bit of an impact of a pass-through contract in the UK public sector. If we exclude this, we're probably back to +4%. So Capgemini is, we think, gradually completing its transition to Indian model. but still, we still have the growth of Accenture, so there's still way to go. Atos is flat. IBM is growing in infrastructure management, but is still suffering in consulting and SI unit and in application management as well, in GBS. CGI is favoring profitability over revenue growth. T-System is in restructuring mode, and the growth number we think are very much influenced by exchange rates and currency fluctuations. And finally, we still have HP and CSC in restructuring mode. HP probably improving this quarter, CSC deteriorating this quarter. Both organizations seem to be positive in achieving organic growth at some point. CSC especially is guiding to almost flat revenues in its commercial sector unit. We'll see how it goes, because at this point it sort of implies high, very significant improvement for the quarters to come. So that's we think this is a bit optimistic. HP is guiding of a gradual improvement over the next 3 years or so. So very strangely enough, the restructuring of T-System, HP, and CST is taking years, whereas it's taking less time for a company like Atos or Capgemini. So very different business model, I suppose, but also the fact that HP, T-System, and CSC were largely involved into infrastructure management. So I'm done with the performance of those vendors, and I'd like to spend a little bit of time on the outlook for 2015, 2016. And I'm going to reflect differently than we've done in the past. So in the past, I would, based on these low IT outsourcing bookings and the economic conditions and the short-term indication that the vendor are giving us, I would provide, an outlook for 2015 and 2016. Now let's deepen our analysis a little bit, and let's start by the impact of what's happening in infrastructure management. And again, this is about the impact of Indian offshoring and of cloud computing in its public form. And this is because we get this question all the time. So on the right side, you've got the spending in infrastructure management, so networks, data centers, and servers. That includes cloud, public and private, and also anything related to end-user computing. That's infrastructure management, and that's something. Let's make our life simple. That's $140 billion in spending annually, and that's growing at best by 1% this year, probably the same level next year. So very flattish type of spending. So now you've got public cloud, which is at least growing by 30% each year, has been for the past 2 years. And that's probably, we think that cloud computing in its public form represents about 6% of all IT infrastructure management. If we sort of compare it to what is server management, cloud spending, and also data center services, then the market share of public cloud is 10%. So, and it's growing fast, but it's fair to say that there's still a lot of potential. So I guess what we are saying is we think cloud has still very much potential for growing very fast in the next 5 years at least. And this is true as well for Indian vendors. So not talking about the onshore vendors which have Indian delivery capabilities, but talking really about Cognizant considered as an Indian vendor. TCS, Wipro, HCL, and so TCS, Wipro, HCL, Infosys, and so forth. I'm missing one. They've got, we think Indian vendors have got a market share of 10% out of the total infrastructure management market. It's growing by 25%. So is as well for Indian vendors, we think they've got a lot of potential in terms of growth. So what's the bottom line? So the bottom line, the impact of that is really the traditional server management that is not cloud-based. We think that's going to decline by at least 4 to 5% annually in the years to come. So it could be very well accelerated in terms of decline. Public cloud is growing by probably 30%. Private cloud probably lesser, but still 20-25% probably. And we've got the Indian vendors in infrastructure management growing by 25%. So we've got a market that is far from having been transformed. There's still a lot of transformation that is going to happen in this market. And clearly we think, and that's a good news for clients, we think infrastructure management spending will grow at maximum by 1%. Volume will go up, but the spending itself is very likely at some point to decline. So we've got an overall flat at best to declining industry here. I thought I'll stop here and talk about, I think, what was a very interesting contract that was awarded on October 1st of this year. I touched on it, mentioning that was a $1 billion 10-year mega deal awarded by an IT service firm called Every, headquartered in Norway. For those of you that have been following the IT service industry, Every is the former Ergo Group or EDB business partner. So this is a major Nordic vendor with $2 billion in revenues, and it's also a significant infrastructure management vendor with $620 million in infrastructure management revenues. So that for Nordics is significant. And what happened is Every awarded this deal to IBM for basically deploy and retransform its data center in close to Oslo, and so it's commissioned IBM to install and run its data center from the cloud side, hybrid and public, based on soft layer standards. So that's very interesting in the fact that for several reasons, Every has been taken over in December 2014 by private equity, Apax partners in that case, in this specific case, and it's been needing to improve its margins and revenue growth for years. So, Every had grown by a lot of M&As, especially in Norway, and for the past 4 years been sort of struggling to grow and also to increase its margin after so many M&As. So here it was acquired by Apax partners, and you've got then Apax, typically of private equity funds, acting quickly and making very, very strong decisions. And in that case, we think, subcontracting or awarding an IT outsourcing contract to IBM is a very, very strongly mining decision. Every remains in the IT infrastructure management business, but it's going to keep on operating the data center while IBM will manage the soft layer technology. So managing and monitoring the cloud, hybrid and public cloud technology and servers. We think it's interesting because also Every is very strong in Nordics, well, in Norway, in Sweden, in financial service and public sector. So again, cloud and public sector and financial services, that hasn't been in the past a very adequate type of match. So we'll see how it goes. We think it would be very interesting to monitor how clients of Every are accepting this type of approach. And there's also the fact that Every is actually investing very little money, about $60 million on the deal. It's going to pay, as I mentioned, $100 million per year, but it's actually spending very little in capex. $60 million is, we think, fairly small for a $2 billion company. So bottom line is a deal to be monitored. Clearly, that is the part, this part of the industry where you've got the big vendors in cloud now being more and more concentrated, consolidated, and revolving about deep pocket firms, IBM, Amazon, and TNT, Microsoft, Google. So not exactly IT services vendors, but more technology firms with lots of money. And most of IT service vendors moving away from capex and taking an asset-light type of approach. So we'll see how it goes further for firms like HP and IT System and Atos, but clearly this is an interesting trend. If I can reflect back into what happened 10 years ago, we saw that kind of of concentration, change in business model with the hosting business, where certainly the IT service vendors moved away from building data centers for reducing their capex investment and starting to use the co-location and the hosting vendors as subcontractors or co-partners. We've seen this happening as well in field services. So this clearly is the next stage of evolution of infrastructure management, with lots of the heavy capex activity really moving to the vendors that are at large, not necessarily coming from the IT service industry, and the IT service industry moving into much more OPEX type of services. So a bit of a changing moment. Really, that needs to be further understood, but I think this is probably going to be the future. I probably wanted to talk about digital transformation and its impact. So, we just talked about cloud computing in its public form. So this is more on the IT outsourcing side of things. This is more on the IT infrastructure management services. Digital transformation, so if you exclude cloud computing, the activity of Amazon and Google in terms of infrastructure as a service, if you remove this, then digital transformation is a lot about actually professional services. It's really a lot about consulting and system integration, wherever big data, analytics, mobility, mobile applications, and e-commerce, user experience, and so forth, and IoT, actually. So a few assumptions here. Professional services, we think that's going to grow by a maximum of 4-5% by 2019. It's a cyclical activity. We think 5% growth in spending in 4 to 5 years is a maximum. It's largely because the budget of clients is not extendable. 5% is probably the max, we think. Within this, we've got digital spending, digital professional spending that is going to grow at very high level by probably 20% currently, and we assume its growth will slow down to 14% by 2019. This is all theory, but we know it's very likely there's going to be a slowdown. But we still think this is a really reasonable assumption. So what does it tell us? That non-digital professional services is going to be, at best, growing by 3% by 2019, at best. And we think this is interesting because, at 3%, you're really you're very close to 0%. You need to invest into industrialization. You need to, this is about offshoring. This is about providing an industrialized service to your clients, not about innovation. In the sense digital is. And we think with digital requiring a different type of skills than the traditional consulting system integration type of capabilities, we think there's a significant level of restructuring that is going to happen in this industry. There probably is going to be reskilling, but restructuring is probably one way to go. So we think cloud computing is being disruptive in the IT outsourcing side of things, but digital is also going to be very disruptive to the professional service activity, and we think from the vendor perspective, that is going to impact margins as well. And clearly as well in Western Europe, where the labor laws are more stringent than in the US. So we're fairly cautious about professional services. Yes, there's quite a lot of solid growth ahead, but it's not going to be, doesn't mean that's going to be any better, that and margin will be under huge pressure as well, especially when if the economic conditions are not as good as we expect, or if we've got a slowdown in digital transformation spending that is more important than we think it will be. Bottom line, we think the market landscape, the vendor market landscape and the vendor rankings are going to change again very significantly. We've put down an estimate of the revenues in IT and BPO services for the main IT service vendors for 2015. Remember, this is an estimate that we've provided, and if the largest vendors, the top 5 vendors on earth now are IBM, Accenture, HP Enterprise Services, the services arm of Fujitsu, and TCS. Now, if I look back about 5 years ago or even 8 years ago, IBM would have been at $60 billion in revenues. HP, having just merged with EDS, would be at 35 billion $30 to $35 billion in terms of revenues. Accenture would have been at 20 billion. Fujitsu would have been about the same, and TCS would never have been there. It would have been in the top 10, not in the top 5. So this industry has changed quite a bit. It's fair to say the Indian vendors have moved in the rankings very quickly. Cognizant is already number 9. It would be probably number 6 to 7 next year if it continues at the same type of growth. Of course, the audit vendors and the multidisciplinary vendors like Deloitte are no longer in this ranking apart from Deloitte. Then you've got Entity Data, Atos, and CGI were not on this type of ranking 10 years ago. So a lot of the vendors have changed. And clearly, if I project myself in 5 years, the Indian vendors will be many more Indian vendors in the top 5, or at least in the top 10, and we'll see where the M&A specialists will be. But it's clearly the fact that Amazon Web Services, even next year, is going to be in the top 15. So this industry, this ranking is going to change very significantly, and we think this industry is going to change significantly as well. So, 10 years ago or 15 years ago, we thought the telecom vendors, the telecom service providers would be making big inroads in this industry. Those were the time where BT in UK was investing quite a lot in IT services, in BPO services, even Verizon and NTNC at some point. That didn't very much happen, but we're clearly seeing the Amazon Web Services now coming to this type of ranking, and Google will come as well. So this industry's ranking is changing quite a bit, and also there's quite a bit of M&A activity in the federal sector in the US. So we think, again, disruption is ahead in this industry. So all in all, based on all I described in terms of impact of the cloud, in terms of Indian vendors, in terms of digital, in terms of the changing vendor landscape and so forth, we're still predicting a growth of 2% in IT services in 2015. Now, that's not highly difficult because we're already on October 5th. But we're also predicting the same type of growth in IT services for 2016. So, if you had asked me a quarter ago, we were expecting 2016 to improve, spending to improve in 2016. Now we're taking a more cautious view on that. We think professional services should be by 3% max next year, 1% max for IT outsourcing. So all in all, 2% in 2016. So I'm done with my presentation. I probably want to add that John Winmott, our founder, will be presenting on the 22nd of October at 4 p.m. BST, and please register. You've got the email address and the website address if you wish. So as I said, I'm done with my question. Paul, did we have any questions during the call?
We did indeed, Dominique. Quite a mixed bag of questions, actually. Some of them asking about the major themes, some of them asking for clarification of some of the data points. So I'll try to just pick out a representative sample. Okay, let's start with this one. You mentioned the Indian model quite a few times. Can you expand on that briefly for those who aren't familiar with it?
Okay. I suppose in terms of the Indian model has got quite a number of aspects to it. It's a very centralized and very, of course, Indian-centric model. I suppose what is interesting, especially in infrastructure management, is it had two effects. It reduced prices and spending very significantly. So not only by providing the same services at a lower price, but also by forcing competitors to line on their prices. So so I guess this is very good news for the client, because if they're getting the same type of service for a lower price, at the same time, from the vendor perspective, it's a major shift in the industry. So I'm not sure whether I'm responding well to the question, but I'd be happy to comment offline and understand a bit better what the question was about.
Oh, that's great. Thank you, Dominique. Could you reiterate what's going to happen in professional services, and particularly the impact of digital transformation?
Yeah, sure. I suppose what is clear is consulting and system integration or professional services is a cyclical business, and historically it's grown by -5%, -10% to +5 to 6+7 at the best time in this cycle. So we think that's largely because there's a limit to the level of spending that clients want to actually spend in professional services. So 5 to 6% growth is quite a lot, actually, in terms of growth in budgets. So we think with digital transformation, professional services being so much in demand, the clients are going to make an arbitrage between the traditional CNSI spending and the digital one. And therefore, that's going to really impact the non-digital professional services. And that's going to be growing by 2%, probably +3%. Now this is where at this point, at this level of growth, this is where you need to provide an industrialized service, where you need to invest into repeatable delivery, Indian delivery, and so forth. So digital is actually also driving a lot of transformation into system integration. And it's fair to say that at this point, apart from the Indian vendors, all the onshore vendors have been more involved in transforming the application management type of delivery, and less so their system integration delivery. So that remains quite a bit of transformation for the onshore vendor, and especially in terms of delivery, IPs, and moving all that work or a bit of that work to India. So again, I hope that helps. I'll be happy to clarify it offline if that's required.
Great, thanks, Dominique. Okay, so this one asks about IT bookings, which are down and have been for several years. But the question says, contracts that were signed a few years ago that are coming due for renewal or recompete, why aren't they showing in the numbers? And maybe they are, I don't know, but if you could clarify that.
Yeah, it's a good question. I think there are probably a few trends happening here. First of all, there's all those contracts, they're now being awarded differently. Away from very large deals to mid-sized deals with different vendors or broken up. There's also the fact that new renewals, sort of TCV is actually moving to the cloud, and so it's lower TCV as well. And there's also the fact that it's going to be offshored. And finally, I guess I'm saying the TCV is declining for those contracts, so it's less. It is in a number, but not to its full extent. And also, I'm sort of expecting still, a new wave of renewals of those contracts in the next few years. So probably in 2016-17, there should be a new flow of renewals of those contracts because usually they were signed now 4 to 5 years ago, or in 2008, 2009, 2010. So they should be up for renewal. But what I'm also saying is the TCV, the combined TCV, the combined value of those contracts would be not as big, largely because you've got the deflating impact of cloud and Indian offshoring.
Right, thanks, Dominique. This one's quite specific, actually. On slide 25, you actually mentioned works councils. Can you explain their role?
Yeah, I think it's fairly clear that in Europe you've got trade unions and work councils with more labor laws. Well, you've got stricter labor laws for laying off people to be completely transparent. And that's clearly true in Germany, Sweden, France, Italy, and so forth, and less so in Spain. So there is the fact that we're now seeing the vendors trying to make people redundant in some of their in the countries, in the geos where the labor laws are stricter. So in the past, you would have seen vendors trying to lay off in the US and trying to reskill or being picky about redundancy in the European countries because laying off was expensive or perceived to be expensive. Now there's clearly a tendency to lay off people as well in the countries where laying off people is perceived to be expensive.
Okay, the questions are still coming in, actually, Dominique, so I'm going to have to pick and choose here. This one is about the contracts analysis showing, are you seeing the same themes and trends occurring for contracts over and above $100 million? That sounds like an arbitrary line, but obviously there's some, if you could talk to that, that would be fantastic.
Yeah. I mean, there's nothing different in terms of patterns between the big deals and the mid-sized deals. I suppose a very generic comment is 10 years ago we moved to a lot of mega deals to more mid-sized deals that has been called selective outsourcing or multi-tower type of deals. That has been going on. It's still going. It's still happening. At the same time, we're still seeing a flow of very large deals, large mega deals. Not a lot of them certainly, but on average one per quarter. So that's still going on. We and sometimes even those mega deals are awarded by tower, so infrastructure management, application outsourcing, and telecom. So no, I think the trend. I'd be curious to talk to them or to exchange with the person that had the question, because I'd be interested in knowing what this person really wanted to know. But
sure, we can dig a bit offline, Dominique, and I will, just for everybody to know that we'll follow up on any of the questions that we didn't get around to answering. But let's just finish with one final one, with just a couple of minutes to go. It looks like contracts are awarded by the same three sectors in the data. Why isn't that spreading to other sectors?
It's a good question. Again, it's based on historical data, and it's really showing because each country has got its own vertical split. And you move into continental Europe, you've got much more manufacturing, and then say in the UK and probably in the US. So for years we assumed, when IT outsourcing would spread from US, UK/UK to continental Europe and Japan, we'll have a different breakdown of verticals for IT outsourcing bookings. And that never has been the case. We've seen adoption of IT outsourcing across geographies, clearly in continental Europe and also in Japan, but we still see those three sectors being, representing 70 to 75% of all bookings. So what I'm saying is actually those three sectors, financial services, government, and manufacturing, are the more sectors, are the most sectors prone to adopt IT outsourcing than anyone else, than any other sector in any geography. So that's interesting. That's really a pattern. Again, I think I mentioned that those three sectors, they account for 75% of all IT bookings, but they account for less than 50% of IT service spending. So they prefer multi-year contracts for awarding IT service contracts, whereas the other sectors do prefer the short-term contracts, the professional services contracts.
Great. Okay. Thanks, Dominique. I think we'll have to call it a day there, ladies and gentlemen. Thanks for attending today. And I'd just like to remind you that the IT Index Webcast highlights latest developments in contract value and contract movements within the ITO space. But this is just a very, very small fraction of the research that we do on a continuous basis. Our subscription clients can benefit from comprehensive market analyses and insights across all the key ITO areas throughout the year, including digital transformation, cloud, big data and analytics, Internet of Things, as well as the more traditional areas of software testing, application outsourcing, infrastructure management, and so on. Do get in touch if you have any further questions. We'll get back to you or any questions that we were unable to answer. And if it's in your focus area and you're interested in the BPO Index, the equivalent to this one, please do register for John Wilmot's presentation on the 22nd of October. So thank you again for attending, and have a good day.
And many thanks, everyone.